On Tax TV, we always bring viewers the latest news and also update people on various news stories as they develop and gather pace. Over the last couple of years, if you have been watching Tax TV or have read articles written by Tim, or of course just seen Tim or me lecture around the UK, you will have heard us talk about top slicing relief and some of the huge issues that we believe are lying within the calculations that are done by the revenue and also tax software. On this month's Tax TV, I interviewed Tim to discuss the latest news, which involves the Silver First-Tier Tribunal case, and Tim takes us through some extremely useful advice for anybody who is concerned about their clients as far as top slicing is concerned. And remember that on the Absolute Accounting software website, you can find all of the software which Tim refers to during the interview. Some viewers will remember that around about 2 years ago, Tim and I started to talk about chargeable event gains, and an area of tax that most people know exactly how to do a chargeable event gain calculation. You type the numbers into a computer, the computer says a number, you accept it's true. Of course, there is far more to it, and we need to always think about exactly how that calculation is done. And what Tim realised a couple of years ago was that the calculation simply didn't seem to fit with the law as it was written. As a result of that, Tim's been in various negotiations and conversations with people over the last couple of years, and it looks like, following some very interesting news, we could be reaching the end of this conversation, and you were right all along.
Could be the beginning of the end, I guess. Let me start by reading to you Extra Statutory Concession B41, and it's one of the remaining extra statutory concessions that has not been codified, and it says, claims to repayment of tax, that's the heading. Under the Taxes Management Act, unless a longer or shorter period is prescribed, no statutory claim for relief is allowed unless it is made within 4 years from the end of the tax year to which it relates. So that's the first paragraph, there are only two, and that simply rehearses the normal 4-year time limit for an overpayment relief claim. But it then says, however, and here's the concession, repayments of tax will be made in respect of claims made outside the statutory time limit where an overpayment of tax has arisen because of an error by the Inland Revenue or another government department, and where there is no dispute or doubt as to the facts. Inland Revenue now, of course, HMRC, but that concession clearly allows for an overpayment relief to be made without time limit where the overpayment of tax has arisen, I'll reread it, because of an error by HMRC or another government department, and where there is no dispute or doubt as to the facts.
Okay.
And I think B41 is going to be invoked by a very large number of taxpayers if the recent First-Tier Tribunal judgment in the Mrs. Silver case is upheld. That then leads us into the question of overpayment relief claims and the restriction, condition G, that the revenue rightly apply if the payment of tax that is then being claimed as an overpayment was calculated in accordance with practice generally prevailing at the time. I'll abbreviate that to PGP, so a new acronym for us, PGP, Practice Generally Prevailing. And I'm mentioning all of this as a precursor to what we're then going to talk about in substance, which is top slicing relief, because a number of years are now out of time in terms of amending assessments. We're sitting here in May 2019, and of course, we are able still to file an amended return for 2017-18.
Yep.
For 2016-17, the amendment deadline has already passed. So 16-17 is out of time for an amendment, but it's in time for an overpayment relief claim. And an overpayment relief claim for 16-17 can be made any time up until the 5th of April 21.
Okay.
Now,
which is the 4 years that you
deadline,
mentioned.
Yeah. Now, if we're looking at years earlier, then 14-15 is already out of time, isn't it? So 15-16 is still in time for an overpayment relief claim. But if we're looking at earlier years, we're going to have to invoke extra statutory concession B41. Agents need to know that they should resist arguments from the revenue once we start this flow of cases on top slicing relief, we should resist arguments that overpayment relief claims are not valid because of practice generally prevailing. Actually, there was an article, I wrote my article in September 2017, but I refer in that article to an article written by Richard Curtis, the editor of Taxation, in September 2009, albeit that one related to age allowance, and that in fact referred in turn back to an article that Richard wrote in 2002. So there have been 3 articles in Taxation going back, not just to September 17, but to 2002, that have touched on this subject. So I think the revenue, were it to go to tribunal, which it may well have to, would struggle to deny overpayment relief claims, whether in time or under extra statutory concession B41 out of time, under the PGP proviso.
And the out of time rules have no time limit to them at all?
Correct. So I think that we could go all the way back. Realistically, that means going back to, I guess, 2015, if that's when the PA threshold of 100,000 was introduced. My calculator actually goes back to 13-14. I forget why I've taken it back that far, but there are errors in the calculation going back to 13-14. Now, what has happened most recently? Well, I've been talking to a number of agents who've got clients who are adversely affected by the revenues calculation. I met the revenue, having emailed them and had long correspondence with them. I met them last July 18, and got the distinct impression that they saw my point, but without solicitor's office going through it, they weren't able to come to a conclusion, and it would have to go to tribunal. I've seen one independent review and 2 others are in the pipeline, and one of my agent contacts has got a client who's appealed to tribunal. But then, out of the blue, came the Silver case. And this concerned a Mrs. Marina Silver, and her husband represented her at the first tier tribunal. No oral evidence was taken, so it was simply looked at on paper, the bundle that was presented. Judge Barbara Mosdale was the judge, and I have no knowledge of the case whatsoever. I can imagine that the bundle would have included, given the timing of the events in this case, would have included reference, if not a copy of my article, although I'm not claiming direct responsibility for it, that remains to be seen. But suffice it to say that Judge Mosdale agreed 100% with my analysis. And the result for Mrs. Silver is that the demand that the revenue have put on her for an extra £22,000 has not been upheld. And so the revenue's assessment on her, on the basis that her top slicing relief was only a couple of thousand and not 24,000 odd, Barbara Mosdale agrees with me, it should have been the higher figure. So there is a case, 20 grand, thank you very much.
And the fundamental point here, we don't want to go through huge calculations, but the fundamental point is that the way top slicing relief is calculated is by looking not just at the amount of tax that would be due in the current year, but the amount of tax that is in the current year if you take one fraction of
the slice,
the overall gain. And as a result of that, the question then becomes, well, what aspects of the calculation of tax in a particular year do we have to reperform? Does it have an effect on the personal allowance? Does it affect the £100,000 point, etc., etc.? And the answer in this case is yes, it does.
I mean, the simple point is that the legislation requires us to calculate tax on the slice on the basis that the gain is limited to that one slice. And as Barbara Mosdale says in her judgment, we must do this hypothetical calculation, and in that hypothetical world, you would be entitled, or you could be, depends on the figures, to the full personal allowance. So it's a 100% confirmation of my analysis, I'm happy to say.
The only risk, I guess, is that the revenue will now appeal.
Well, it's not over by any means. I mean, this, as I said earlier, is the beginning of the end. But let me stress that there are innumerable taxpayers, many deceased, I'm afraid, but whose estates will be interested, for whom there are tens of thousands of pounds at stake, because the amounts are very, very significant. The next stage will be the HMRC appeal to the upper tribunal. And I heard the day after I saw the case judgment that a revenue officer said to an agent who rang them up saying, I've just seen this judgment, so you're going to drop it, said, well, we've been told we're going to appeal it. So it may be by the time viewers are watching this interview that the appeal has already been lodged. But reading Barbara Mosdale's judgment, I just cannot see that the upper tribunal has any grounds for overturning it. They'd have to find she's interpreted the law incorrectly. It's not a question of fact, it's a question of the law. And I would be very, very surprised if it was overturned. But that's what the Revenue are going to do. They're going to hold out, which I think is wrong, but all agents need to review their entire client base for anybody who's had a chargeable event gain over the last goodness knows how many years and begin to put together the claims that are going to be made.
And as you said before, I think that obviously we would definitely consider the years that are still live, but we should also go back and look at, as you said, you found mistakes going back to 13, 14.
Yeah.
So we should definitely be looking at least that far back. And is there anything that people need to do, or is it just a matter of having performed those calculations, we then wait to see what happens next with the court? Do we need to make a protective claim or anything like that?
I think in order to minimise any possible difficulties with the Revenue, it would be best to make claims that are in time as soon as possible. So we are now in May 2019. Okay, we've got the 16-17 year out of time for amendment, but in time for an overpayment relief claim. But then we've got until 2021. The next deadline for overpayment relief claims will be April 20, which is the deadline for a 15-16. So I guess identify those and put in the overpayment relief claim so that we're not having to rely on B41. Certainly by 31st of January next year, that's going to be the deadline for amending a 16-17 return, isn't it? No, 17-18
return.
So amending 17-18 returns, we should put those in so that we don't have to go through an overpayment relief claim. So I guess we should do that. It's difficult. I don't want to give advice. I'm not in the business of giving advice, as it were, but I personally would, well, what I've advised agents thus far is to advise clients to pay the tax so that you don't have penalties and interest hanging over you and then recover it from HMRC. Maybe in the light of the FTT case, the Silver case, don't pay the tax and certainly claim repayments if it's already been paid. But of course, it does give agents the significant difficulty of identifying the clients and working out the figures. And as far as I know, I'm the only one that's got the calculator that accurately works it out. Because what prompted all of this was me 2 years ago being asked actually by an agent, could you put chargeable event gains into your tax calculator? And that's when I started looking at it and thinking, well, I'm getting totally different figures from HMRC. Why is that? And drilled down and discovered that they hadn't bothered to apply the legislation the way that it should be applied. But it's not just this slice calculation, it's also the way in which under Section 23, whether it's the real Section 23 or the hypothetical one, we've got to allocate allowances and reliefs in the way most favourable to the taxpayer. And you actually have to do 3 separate calculations in order of allocation of allowances and reliefs in order to come up with the right answer, which is what my spreadsheet does. And for, as many of our viewers will know, we've had online a free checker, which is still there, and a pay-per-view version to give the full workings.
The key point here is that we've been telling people this for 2 years, and people have been saying, well, I'll wait till somebody else agrees with you. Barbara Mosdale has now agreed with us, and that's fairly fundamental. And to be fair to the Revenue, conversations you've had with the Revenue, a number of people within the Revenue, I think, have also been...
I have every sympathy for the people I've dealt with at the Revenue, because they, I think they did take my point. They understood the point I was making and taken them through the legislation, but said, look, we can't do this. It's got to go to Solicitor's Office and Legal Services, and they don't have the resource to look at it. It will need a tribunal hearing. So, you know, they're just having to do... and
I suppose,
you know, it then goes down there, so we then have revenue officers who are answering the letters that agents are sending in and saying, no, he's wrong, we don't agree. They've got to toe the party line. But, and they've got to appeal it because there is a significant amount at stake and a degree of loss of face, I suppose. But...
And you mentioned that the Silver case is probably £20,000 or thereabouts tax difference.
No, it is.
You've done some calculations which are notably more than that.
Oh, up to 40,000. Yeah.
So it is a hugely important thing to get right.
Yeah.
And whenever we talk on Tax TV about this topic, we do occasionally get people saying, "Oh, well, is this important, or is this about software?" Genuinely, it's not about software. We discovered this because of the work you're doing on software, but this is a hugely important technical tax point, which gradually people are coming around to the fact that, much as it grieves me to say it, Tim was right from the very first day. And as a result of that, you must consider what is best for your clients at this point, whether that be looking at the current years, as we've already said, looking back over the previous years as well, but performing these calculations, double checking now, and taking action as soon as you possibly can. This is not the end, because there will almost certainly be an appeal, but even then, the position doesn't change for us now. We must make sure that any client, where there is a chargeable event gain over the last perhaps 5 or 6 years, we must make sure we have double checked the mathematics and we are satisfied that we are offering the best advice we can. Have a look at Tim's article, the original article, which has some fantastic examples in it, which you will find on the Absolute Accounting Software website. And also, as he's already mentioned, have a look at the calculator that you will also find on that website.
Can I also add?
Of course.
That there's an important planning point. Suppose that a client has one of these investment bonds, single premium non-qualifying life policies, and they are considering cashing it in. Well, I can work out on my calculator what the tax implication will be of encashing however much it is given the term of the policy. And now that we've got the Barbara Mosdale judgment in the Silver case, I can far more confidently say, well, actually for this client, this year, cash in, let's say, £60,000 of that policy, and there'll be no tax to pay. And then the rest of it, 140,000, cash in next year, and there'll be no tax to pay. So the way in which we can now advise on minimising the overall tax on encashment of a life policy changes very significantly indeed.
So the advice that we need to offer will change fundamentally, potentially, as a result of this. Do have a look at the calculations. Do make sure you're happy with exactly how the maths works, what the consequences are for your client for historic returns that have already been filed, and as Tim says, for future possible disposals, because the numbers, we suspect, will be very different for an awful lot of people.